Today, folks, these markets are so insanely bullish. We are now bouncing on Monday, heading into an incredibly pivotal earnings, and these earnings will dictate what the market is about to do. But we are now up about just over a percentage point from the lows coming into Monday here after a pretty pivotal sell-off. I mean, we almost got a 3 percentage point sell-off, but every dip has been a buying opportunity, and we're going to find out if that persists this week. We're going to look at the not so pivotal earnings coming out of Verizon, what that means for Apple. We're going to talk about the future of Verizon and why I'm still very bullish on the company, even though it's dropping today. But if we take a look across the board here, with the exception of some energy, things like Coca-Cola and Pepsi that aren't materially down that much. You got some telecom services because, again, Verizon posted not great numbers, bringing the whole sector down with it. But across the board, otherwise, everything is green, especially if you're buying the indexes or if you're buying ETFs that hold baskets of these stocks, because the broader basket is pumping. Canadian markets are actually holding up. Energy is doing much better on this side of the border. And again, across the board, with an exception of a few companies, we're still doing exceptionally well. I mean, look at this, right? SEHD just dipping below the green. It's trying to hold on, but for the most part, tech's rallying. Heck, even Tesla here is rallying up 5% heading into its earnings tomorrow, which will be very pivotal to watch. It's going to be exciting to see if it actually breaks 260 and continues on to that $300 mark, so you can all make fun of me and said I sold it too early. That's a very real possibility. Nobody knows here, folks, but look at this. Palantir down a little bit. Shop getting hit a little bit, we saw there. I'm always shocked to see when the meme stocks go up. GME, we've been seeing crypto pump. CrowdStrike getting devastated today, down 12%. Somebody was asking me if they think this is a potential buying opportunity right now after that huge blackout, one of the largest in technology history. And honestly, no, I don't think I would touch this because there's going to be a lot of fallout, and we don't know what the damage is going to look like, because people are going to be leaving CrowdStrike after these major outages. You're going to be getting a lot of lawsuits. I mean, airlines, all these companies that potentially lost out on millions, if not billions of dollars, are going to be coming after CrowdStrike, and they're going to be lawyering up to see what rights they have to sue over here. So CrowdStrike, if anything, I was thinking about it this morning. I was like, man, what a great company to short, or probably options against. I was debating it. I don't really play the short-term swings like this, but if there's ever, a stock to short, I mean, this thing is probably going to be in some calamity mode and, basically doing a recovery mission for quite some time here. But yeah, let's take a look at the earnings cycle here, because the only one that interested me today was Verizon, and we got that post in the morning. So we're going to take a look at Verizon stock. And again, get ready, because UPS is going to be interesting. Coca-Cola will be interesting. Tesla, Alphabet, Visa. Man, these next few days, woo, baby, are going to be exciting for you nerdy losers like me that have nothing better to do than read a bunch of balance sheets, because God knows the wife doesn't want to hear about it. But here we go. We got Verizon Communications here just dropping down pretty dramatically. I mean, a 6% drop on earnings is not a small drop, considering we are down 31% over 5 years. Year to date, just struggling to hold on to that green. And I want to explain to you why these companies are buying opportunities right now, because they can't afford the dividend. I want to point out first and foremost here, and I know a lot of people look at these and they're like, oh man, this thing hasn't done any gains. I always tell you total return matters overall. If you're trying to play these individual stocks, these are the opportunities where you get to play them, in my opinion, because I think there's still going to be some substantial upside related to the interest rate cycle, which we'll take a look at. But in the basket of me owning this, it's really just an SCHD. It is a fairly large position at 3.84%. And when I mean large, I mean, yeah, materially for SCHD, with the top holdings be around 4%. It's still a pretty decent chunk of the positioning, right? And I like it. I hope they keep it in here, because again, in the recovery play, when you take a look at their interest expense, it has gone up so dramatically, from this time last year, from 1.28 billion to almost 1.7 billion. I mean, we are talking about pretty big numbers when it comes to those interest expenses. But let's not look at interest expense. What I want to look at here, first and foremost, is services revenue. Take a look at total operating revenue. We actually saw a slight increase on operating revenue, nothing substantial. The company's basically remaining flat. We're going to explain to you why that is and why there's been no growth. But it's really great that these companies offer really stable businesses, because people just aren't changing their phones out much. They're sticking with the same providers. So revenue isn't as volatile as a lot of other industries, which is a good thing in a market environment like this. However, what's not good is because they're not growing, they have to cut operating expenses to service the debt, right? So we're seeing cost of services sold go down, or actually, yeah, just slightly going down. You got cost of wireless equipment. This one's been going down. Selling and general administrative expenses have been going down. Depreciation and amortization costs have been going up because they're going to write this off to save taxes against their free cash flow. And then you have total operating expense of about 24.9 billion, which is still coming in under where it was this time last year. But when you take a look at that operating income here, guys, and you take a look at net income, it is still down year over year because the interest expense is just eating into them so damn dramatically, right? But again, this is going to be money that will get added to the bottom line as soon as interest rate cuts come. And interest rate cuts also come with another benefit to Verizon, which is, why is the stock going down? Well, they missed on their quarterly revenue estimates because slow phone upgrades. People just aren't changing their phones out. They're not buying new phone plans through these providers, right? Because typically you go to these providers, they'll sell you a phone on a commission sale, basically, of saying, oh, like, you know, we'll sell you this phone at this monthly rate. You don't have to outright own the phone or pay for it right now. You get the monthly subscription, blah, 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 blah. They make some money on that, you know, basically, interesting out the phone, and that's just not happening today, right? As missed quarterly revenue estimates on Monday due to slow phone upgrades in the United States, taking the shine off strong growth in wireless subscribers and sending shares of the telecom firm down 3.4% before the bell. Now, the price-conscious consumers are holding on to their old phones for longer durations than they did previously, which has hurt upgrade rates for telecom companies that offer promotional plans with new mobile phone lines. Verizon reported second quarterly revenue. Yes, we saw this. Analysts have said Verizon is basically reeling from historically low number of people upgrading their phones, although that could change when Apple releases its new iPhones with artificial intelligence features later this year. Generative AI smartphones will be the next driver for growth in smartphones. I believe this extensively, along with interest rate cuts. I think those are the two real things we need to just start accelerating these stocks that have been getting absolutely hammered. But it really does show you Apple stock, they're still in the gutter in the US because people just aren't upgrading phones, right? So that should shine a bit of light that Apple's revenue, phone sales will probably still remain flat or slightly to the downside. We'll see. They obviously boasted on accelerated sales in India. It's gonna be really interesting to see what Apple posts, but I think that is the next growth phase for so many of these companies like Verizon, many of the companies that sit in these dividend ETFs, and it just has to do with that storm of getting consumer spending again, getting new, really pivotal upgrades in phones and laptops, which I think the M1 chip was a really big one for Apple, but lately the iPhones, I mean, I'm still using a 13 Pro and everyone freaks out because I don't have a case on it. I love the feel of the phone without the case. It's lighter, it just feels nicer. But yeah, 13 Pro, I haven't had to upgrade. It's been great. That's a few generations behind at this point, right? So I'm very excited here, guys. Like I said, if you're interested in these stocks, I'm still telling you, the recovery plays around the corner. It's going to take maybe another year to see it fully start getting implemented as the interest rate cuts start. But I'd love to know what you think in that comment section below.